everybody. It's Mark from Landmark Financial Services Group. We finally have a sunny day. It is a warm day. It's May 20th. And finally, yes, the sun is out and the leaves are coming in. So it's springtime is definitely flourishing here. On Monday, we got some guidance on the forgiveness portion of the PPP loan that came out in April. And what I thought I'd do is a series of videos to help everybody understand what those principles are. Now, this video and the guidance we're going to put on our website is not all inclusive. All right, there's more to it in some capacity, but it's going to help you get through some, if not all, of the major questions that you have. So we're going to do 4 videos. One is going to be on each one of the major categories that I think are part of the forgiveness. One, we're going to talk about eligible payroll costs. What is forgivable and how to do that calculation? The second is non-payroll costs. So what else is included that's not payroll, which is your utilities and rent, et cetera. Then we're going to talk about FTE, that's full-time equivalent calculation, because that does play into how much can be forgiven. And then lastly, what are the documentation requirements so that you can understand, A, what you're going to have to submit, and B, other documents you may need to keep even if you don't submit them to your bank. So today we're going to talk about the first one. This is an important one. This is where we're going to talk about the payroll costs and what's forgivable. Okay, so I'm going to share my screen with you. By the way, this outline we're going to post on our website as well. So let's walk through this because this has been guidance we've been anxious to get, and like I said, just came out. So I'm going to read a little bit and then we'll talk about it. Payroll costs. So what is an eligible payroll cost that is forgivable? Okay, payroll costs that are paid and incurred. Now, those are the 2 words that were in the legislation. And that gave us a little bit of concern because the word incurred means that the payroll was actually earned on the day. And of course, payroll cycles don't work the same day that you get your loan proceeds. So we weren't quite sure how the pay of the payroll matched the earnings of the employee on a day-by-day basis. So you'll see here, incurred means payroll costs are considered earned on the day the employee earns it. Paid is when the payroll is actually, the paychecks are distributed or an ACH transaction is taking place. There is this concept called the covered period, and that covered period is considered to be the 56 days, that's 8 weeks times 7 days a week, the 56 days from the day you got the proceeds until 8 weeks later, that's called the covered period. The payroll costs within that 8 weeks is what's covered, okay? And it says payroll costs incurred but not paid during the borrower's last payroll period of the covered period are eligible forgiveness if paid on or before the next payroll date. Just make sure you don't count payroll costs twice. So what does that mean? So let's say the covered period ends on June 15th, but your payroll for wages incurred up through June 15th aren't paid till June 20th. Okay, what happens? What this guidance is telling us is the payroll paid on June 20th, even though it's outside those 8 weeks, is still allowed to be used as part of the calculation. Okay, that's number 1. Number 2, they came up with what they're calling an alternative payroll covered period as part of the guidance. And basically, this is an administrative easing. And it says, look, we realize that you have a certain number of cycles of payroll throughout a month or 2 months. And what it's saying is, look, just go along with, you can, if you elect, simply go along with your normal payroll cycle. And whatever would have been normally paid within those 8 weeks, that's what you got to do. So that you don't have to do sort of a stop-off period at the beginning of the 8 weeks and a stop-off period at the end of the 8 weeks and do some calculations. Just do your normal payroll cycle. And that's basically what this is kind of telling us here. So to keep that in mind as a potential for calculating the amount that's forgivable. Okay, what is included in payroll costs? Well, clearly cash compensation. So this is salaries, wages, commissions, paid leave, all that stuff, that's all covered in the payroll cost. But remember, it's only for payroll of people for less than 100 grand. So you can include the people that make more than 100, but only their wages up to 100 count as part of the forgivable portion. Then there is health insurance, retirement plans. Remember, what's forgivable is the amount the employer covers. That's what's forgivable. Why? Because if the employee's taking it out of their wages, you're already getting it counted in the first part, in the cash compensation. Okay, so keep that in mind. Also, employer, state, and local taxes assessed on that compensation. So that's most often going to be the unemployment. Usually that's probably the biggest item that you would consider as forgivable. You'll see here that owner employees, one of the things the application is going to ask for as the compensation for owners, general partners, etc., is a separate disclosure on the forgivable portion. So just kind of keep that in mind. And if there has been any sort of an hourly or salary wage reduction as part of this crisis, that also has to factor in, although we're not going to cover that here. Okay, so that's the first part of our discussion, which is talking about eligible payroll costs and how to calculate the payroll that will be forgivable during those 8 weeks. We got 3 more videos coming, so be on the lookout. Okay, thanks.